The market is closed for the day, and BigBear.ai Holdings Inc., trading under the ticker BBAI, finished the last session at a closing price of $6.02 USD. This figure reflects an intraday movement of down $0.17, or a 2.75% decline from the previous close, a movement that certainly catches the attention of those tracking the high-volatility AI sector. The after-hours trading showed a marginal recovery, ticking up $0.04 to $6.06, a subtle move that speaks volumes about the constant tension between profit-taking after a recent surge and underlying conviction in the stock's long-term story. This immediate glance at the price action reveals the core conflict in the BBAI narrative, a stock that has seen significant appreciation over the last year, with a 52-week range stretching between a low of $2.05 and a high of $10.36, is now grappling with the inevitable price discovery phase following major announcements and market hype. The unexpected angle here is not the dip itself, but the way the stock's volume, nearly 88 million shares in the last session, just shy of the average volume, suggests a significant transfer of ownership is still occurring, rather than a simple flight of capital. The common understanding among retail traders, especially those on social media platforms, is that BigBear.ai is a pure-play artificial intelligence stock with deep connections to the U.S. defense and intelligence communities, which gives it a layer of stability and opportunity that commercial-only AI names lack. This expectation is rooted in the idea of massive, locked-in government contracts that act as a foundational revenue stream, ready to explode as predictive AI becomes mission-critical. However, the reality is more nuanced, and this is where a careful investor needs to pause. While the government focus is real and the company's platform is designed for decision-making in secure environments, the latest financial reports actually show a year-over-year revenue decline. The market cheered the third-quarter earnings because they beat analyst expectations despite the revenue dip, and importantly, the company posted a small net income, which is a massive psychological win for a growth company fighting its way towards sustainable profitability. This points to the deeper truth. The stock is being judged not on its current top-line revenue, which is under pressure from slower procurement cycles in some key Army programs, but on its forward-looking guidance and strategic moves. The market has priced in substantial future growth from the recent acquisition of Ask Sage, a generative AI platform. Management's own projections see a six-fold increase in the annual recurring revenue for that specific platform, signaling a clear shift towards modern, high-margin, commercially viable AI products that can operate alongside their traditional government work. This strategic expansion is the real driver, the reality that exceeds the simple expectation of being a government contractor. This pivot is what has institutional heavyweights like Vanguard and BlackRock increasing their positions, a crucial sign of smart money conviction that validates the long-term narrative. We see this institutional activity in recent filings, where there are hundreds of millions of shares held by major institutions, and a net increase in institutional buyers over sellers in the last reported quarter, which is a powerful signal that the volatility is not deterring serious players who analyze the business model and the balance sheet strength. Speaking of the balance sheet, another compelling reality that shatters the usual narrative for a volatile, high-growth stock is BigBear.ai's Liquidity. The company finished the third quarter with over $700 million in cash and investments. This significant cash position, which was bolstered by a substantial at-the-market equity raise, provides an enormous cushion. In a high-interest rate environment where liquidity is king, this cash pile acts as a foundational element of stability, allowing the company to fund its operations, pursue non-dilutive acquisitions, and withstand fluctuations in government contract timelines without facing an existential threat. This financial fortitude is often overlooked by retail traders who focus only on daily price movements and headline revenue figures, but it is the bedrock upon which the entire growth thesis rests. It means that the path to profitability, while still projected for 2026, is far less precarious than for many peers in the sector. Now, we must address the intense pressure from the short-selling community, a constant factor in any high-flying, highly speculative AI stock. BigBear.ai is definitely under fire. Recent data indicates a short interest of over 100 million shares, translating to a short float percentage well over 24% of the tradable float. This is a very high figure and signals a strong, organized bearish conviction. The days-to-cover ratio, a metric that estimates how many days it would take for all short sellers to cover their positions based on average trading volume, is sitting around 1.2 days. While this isn't high enough to indicate an imminent, explosive short squeeze like those seen in past meme stock phenomena, it does show that the short position is substantial relative to the float, and any significant buying pressure or positive news catalyst could lead to rapid price acceleration. The short seller thesis typically hinges on a few core arguments. The high valuation, based on a steep price-to-sales multiple of over 15x, which is significantly higher than the industry average, the consistent net losses in prior periods, and the year-over-year decline in legacy contract revenue that exposes the company to the unpredictable federal procurement process. They argue that the current stock price is an overextension fueled by AI excitement and not yet justified by sustained, growing cash flow. Investors need to be mindful of this contrarian view. Actionable insight here is to monitor the daily short sale volume, which can be found through platforms that track proprietary broker data, and to watch the borrow rate, which is currently around 1%. If the borrow rate were to spike sharply, it would signal increasing difficulty and cost for short sellers to maintain their positions, often preceding a covering rally. Additionally, keep an eye on option open interest, particularly on out-of-the-money call options, as a sudden surge in volume there suggests bullish positioning that could force short sellers to hedge. Do you think the high short interest is justified by the revenue decline? Or are these major firms miscalculating the government AI opportunity? Comment below what you think is the key indicator to watch for BBAI next week: short interest, volume, or a specific price level. The future outlook for BigBear.ai is inextricably tied to its success in integrating the Ask Sage technology and securing new, larger contracts in the defense space, particularly with the U.S. Air Force, where recent contract chatter has been a topic of discussion on X and Reddit forums. The market needs to see the revenue re-accelerate in 2026, as projected by many analysts, to justify the current premium valuation. The risk, of course, is the ongoing dilution from the equity raise, which provides cash but temporarily weighs on the earnings per share figures, and the persistent operational challenges in fully converting its foundational AI capabilities into repeatable, high-margin software subscriptions. The opportunity, however, is immense. The company's focus on decision dominance in national security AI places it in a secular growth environment where governments globally are mandated to modernize their intelligence capabilities. The ability to operationalize machine learning at scale, moving from data aggregation to predictive analytics, is exactly what governments demand. If BigBear.ai can successfully navigate the current revenue dip and show definitive traction in its new commercial and generative AI segments, the expectation of a defense AI powerhouse will align with the reality of a financially robust, strategically expanding technology provider. The coming quarters will not be about survival, but about execution. turning that $700 million cash war chest and the institutional conviction into tangible, growing profits. The slight recovery in after-hours trading after a volatile session suggests that every dip is currently being viewed as a potential buying opportunity by those who believe the ultimate reality of BigBear.ai is far larger than its current fluctuating price action. The narrative for BBAI remains a thrilling race between aggressive execution and the skeptical eye of the short market, a dynamic that keeps the stock firmly on the radar for high-conviction traders.